Okay, welcome, Roland. A pleasure to have you with us at GOLDINVEST. We've been covering the story for years now, and today is the big day of the announcement of at least the beginning of a joint venture. I think that's something you need to comment us on.
Yeah, absolutely. For us, we think it's a fantastic day that we finally got to get some signatures on some paper and cement what we think is going to be a fantastic long-term deal. The market didn't quite see it that way, but yeah, we're very pleased with the way that it's going to, the end result and where this is going to head. Absolutely.
Well, I must confess, I like the Alcoa news release better than yours. I think it was a clean language and clearly it speaks volumes that they are concurrently putting out a news release on this. Means to me that it matters to them. It matters to them. Let alone that they are committed to effectively $194 million US of funding if certain conditions are met. So it is definitely material for both parties.
Yeah, and I think both announcements sort of reflect the commitment. Absolutely, I do believe that Alcoa have done a significant amount of work on this over the last 12 months in terms of their technical and financial market due diligence. So I do believe they're pretty comfortable. Hence the reason why they've signed all the agreements. Yeah, it sets us up for a nice base to go forward, really. So, yeah.
I think the one question you need to address is the question of maybe loss of control, giving away control. That's what I think the fear of the market might be about, that this is a 65-35 joint venture ultimately, not even readily yet, but in a, let's say, when it's completed. So how would you address that issue? To what extent are you giving away control?
Well, are we giving away control? I suppose giving away control to who? A bigger, better, more experienced party? That makes a lot of sense to me.
Yes, okay. But in the meantime, aren't you still the project manager? Or until which point are you going to be the project manager?
Well, we've got a couple of projects, really, I suppose. What we're really talking about is we're formalising a joint venture in time, but until then, it's a joint development. So, okay. They have skills, we have skills. They're quite compatible and complementary skills. So, we see this as the quickest, most easiest, surest and most de-risked pathway to development. So, it's not a matter of them and us at all. Let's get this project built. So that's what we're aiming to do. That's what they want to do. We see an opportunity in the market, and we want to rush to it to get to their appropriate development time to make the most of the market.
So just to reiterate that, what is worst case? If things come together, the amount that you need to invest from an FYI point of view?
Well, look, the capital forecast at this stage is around about $200 million US. Alcoa's commitment for that is up to 194, as you mentioned. Worst case is that at final engineering and final investment decision, that cost might blow out a little bit more. So our exposure at this point, could be more, but at this point, it's about $6 million US.
Okay, so the rationale really is it's 97% capex towards Alcoa, 3% remaining with FYI, saving you the hassle of going out to raise, let's say, to go for debt funding, to jump through all those hoops, and we know that can take a long time. So that is, you're covered on the financial side pretty much, except that down the road there will be an opportunity probably to raise equity to come up with a bigger amount and just to be on the safe side. and cover your application?
So there's we have broader plans. I think it's probably fair to say that there's sort of a number of different things, avenues, opportunities, broader market opportunities, downstream opportunities that we're looking at. So yes, there is the potential to raise capital at a further point, but I think that today's market might have thought that we'd come raising. We're certainly not. We have around about $10 million Aussie in the bank at the moment. That covers us corporately well into whatever development that we need to do in line with Alcoa. Of course, Alcoa doing the bulk of the funding of this project. So, we spent a lot of time trying to do the sums right and get it to dovetail in and make sure that it all made sense. And at the end of the day, we could deliver. So, yeah.
On that note, delivering, what are the potential timelines of the two developments? And they seem to be running in parallel, which was also kind of confusing to me, at least. There's a development plant and then the full-blown plant, but I think the projects are supposed to run in parallel. But what does that really mean?
Yeah, so look, essentially what we want to do is get into production as soon as possible. So that's the number one goal. How do we do that? It makes sense to do the engineering and final investment decisions to a certain degree in parallel. Yes. Certainly the demonstration plant, as we call it, that's a smaller scale, so quicker into development, and then potentially what is the outcome for that might alter what we were trying to achieve with the major plant, size, capacity, location, even perhaps. So a number of different things, but it's not in sequence. It's largely in parallel, and I think that's the key thing. So we're trying to short-term production for both of those particular assets.
I think, the Alcoa news release even mentioned that they're aiming for production in 2024. That's in their statement, at least, right? With the full.
Yeah. So look, I think they're just being conservative. Obviously, our development timeline, we don't really know. It is an unusual product. What we're trying to do is just represent as best we can the most reasonable case towards development, keeping in mind that they use a calendar year and we use a financial year. So there's a time difference in all of that. But no, certainly what we're aiming to do is develop it as quick as we possibly can. If all those key point decisions come sooner, great. If they take a little bit longer, I guess that's okay too, because just all it means is that we do a better job, better quality, and get into production. We're investing in the long term here, so we want to do it right, and I think we've got the right partner to do that. So, it's to your earlier point. The funding is arranged. That's the biggest hurdle for this particular industry, this sector at this minute. So without offtake, you can't get financing. You can't get debt financing. The equity markets are a bit tough. So we've addressed all that. So that's saved years on its own. We see this is a shortcut to production. Yeah.
I understand. I think that's pretty much also something which is kind of surprising, because the regular or the usual way is that a company like yours would have secured an offtake first and then go to a bank and then do all the, as you say, consume potentially years to get the funding at whatever terms. That is all over. I think that is something the market hasn't fully appreciated yet, probably. Anyways, let's maybe talk about the potential. It's just assume that 2024, there will be a major plant running, first of its kind, not the last, hopefully. But what is the just on an economical point of view, what is the output of such an 8,000-ton plant in terms of cash? I mean, what do you reckon?
Yeah, so under our DFS, that's sort of outlined. I think the principles of that under the joint venture term sheet, we're contemplating production of around about 9,000 tons in total, at least initially. So our forecast revenue is a very conservative $24,000 US a ton. So people can do their own sums on that. Cost of production is under $7,000 US a tonne. So it doesn't take a lot of maths to work out what sort of distributions this can possibly generate for the parties. Obviously it'd be pro rata distribution, and our 35% does amount to quite a considerable amount of cash generation, and what we're looking forward to is some pretty healthy cash flows in the future, as opposed to where we were 1 year ago. I think this makes a lot of sense.
Yeah. On that cash flow note, I think we discussed it at some other point. There is let's say you've established and secured basically that the dividend of that future joint venture will be split according to the ownership, correct?
Yeah.
And that there will be an automated dividend kind of being paid, or is that does that go too far into detail here?
Look, obviously Alcoa, they consider it to be a business and a prime business for that, so a good generator. They're a public company as well, so their primary focus is to make profits and generate revenues as a result. So distributions is probably a key thing. That's one thing that we have discussed at joint venture level is how do we distribute. They're equally motivated to make sure that's maximised as much as we are.
Yeah. To close off, if you were to look forward to the next couple of weeks or months, there should be more, let's say, events coming to confirm that the development is actually happening. Can you name some of them, maybe?
Yeah, so look, now that we've signed, we've got a pretty hectic sort of a pathway, I suppose, to development. We've got a couple of meetings getting started to be aligned for that. So we have a final engineering that we need to do, a final investment decision. We'll be doing a little bit more pilot plant work. I need to optimise our feedstock sources and how we balance all that. This is also going to be used to lead into our generation of product for marketing and our marketing outreach. So that's going to be a huge focus as well. And really what we're going to be doing is building up the structure to a delivery team, essentially, to kick this off. So, we're going to be pretty busy, that's for sure. Lots of key little events between now and Christmas. And, we're pretty excited about where it's all going to head.
Okay, I think you need to look after your dog here that I'm hearing in the background.
Down the street, I think.
Thank you for taking your time, Roland, this morning. And I guess you need to be on the phone to explain this to more shareholders a lot today. Thanks so much for taking your time. Bye-bye. Ciao.
Pleasure. Thanks for your time. Thanks, Finn. Cheers.